Welcome onto the video, guys, where I'm going to cover a full week worth of trading my 1 minute strategy, going over each day in detail, focusing on the entries of my session. I trade London session 8 a.m. to 10 a.m. When I'm entering my trading week, I have a focus to be consistent in my trade executions. As we go through these trades, you will see how the consistent approach of the 1 minute chart using the RIMC method can lead to big results while keeping your losses small. So starting off on Monday, 8 o'clock as always, looking for that continuation to the upside. Let's have a look at this. On the 1 minute chart, what can we see? We can see a range, we can see initiation, we can see a pullback for that mitigation for continuation of higher prices. Why was I looking to buy? Why did I place my position here? Let's have a look. So quickly zooming out on our chart, nice and clean for us to understand. We can see here that on Friday, the previous week, price ended up being in low prices. This typically means when price is overextended, price is going to pull back, and we can expect price to pull back into that 50% location. That's our analysis. So looking at this trade, let's really focus on what made me click buy and execute on this bullish position. The repeated processes that we use with RIMC is making sure that our entries are always happening at the point of mitigation. That means when we do see price initiate away from a range that has been created, the entry is always going to be at the point of mitigation. So here we can see I've highlighted the range that was created just before my session opening, and it's this location that I was looking to play higher prices. So what have we got highlighted here? We can see we have a clear low in the market, and we have a range contained price that has been presented to us. Based on our frameworks, range, initiation, mitigation, continuation, the execution's always going to be at that point of mitigation. This is where I'm looking to take my trade. And as we can see here, this is exactly what I've done. We've moved into that range. And as we've taken that previous low, this gave me an indication that price could start to move higher. We can also see here that price started to slow down over time and then started to move in that bullish direction. Now just look at this entry, range, initiation, price pulls back. Could have taken an entry here with the same analysis, but that was a bit too close to my session opening. So as price started to move away, clear intention in the market, and price is pulling back into that location. Now there are a few extra steps to allow us to be confident to get into this trade. One of those steps will be to use our framework of A to B and looking to buy in discounted prices. This is what is allowing me to make these consistent decisions every session and stick to the framework. This trade does take a while, but does go on to take my TP. And ultimately what we're trying to do here is be a great observer of these opportunities. The market's going to present us opportunities every single day. We need to identify those consistent frameworks that allow us to execute in the same way each time. If you can have a consistent approach in the charts, then perhaps you can start to see results based on your understanding. And that's exactly what we're doing here. We're allowing the result to present itself. We're not forcing it. We're not hoping. We're following range, initiation, mitigation, continuation, because we know that's how BFI is delivered in the markets. Right, let's go into trade number 2. We can see price is moving higher. We can see relative to what we've been shown, price is currently high in the market. So I was looking to take sells. I'm not going to look to take buys in high prices. And actually, if we zoom out and look left, we can see that price is pulling back into that sell mitigation. So my attempt here was to try and get into lower prices. And this is how I did it. A repeatable process that we can utilize the RIMC method to get into these trades consistently. 8 o'clock, the start of my session, and we was presented that sideways range. This is really quite messy on this 1 minute chart, but on a lower time frame, on the seconds chart, this will be a bit more clearer to understand. We did have that range in price, and then we did see that initiation to the downside. It was that got me interested to play a continuation of low prices, aiming to take out these previous lows and these lows that were presented in higher prices. So I had my narrative for the session to get short, and this is what I played, the range, and we can see price moved away here and then moved back in. And it was here where I chose to be a part of this opportunity with a 2.2 pip stop. This is the smallest stop that I will be happy to take on any position, and looking for that continuation into lower prices. Now, of course, based on our method, we do have a break-even process. This is all part of our strategy on the 1 minute chart. And this is where I move to break even in this trade, anticipating that continuation of that mitigation. We can see here clear move back in range, and we start moving to the downside. So that's where I'm attempting to see now the continuation of that delivery and takes me out for break even, moves that a little bit higher. And then of course, as we all know, price then extends in our direction. Now there was a lower time frame entry here once again, based on our range initiation mitigation framework. This would have been a lovely trade for me to be a part of. I was happy not to take the same opportunities in the same locations. A lot of members did catch this trade on that move down. Really nice to see. Only because I've broke even here, I'm not upset with myself. I can see I've made good decisions to play that delivery in price, and then seeing price extend to the downside makes me feel good because I had the right analysis for the session. Higher time frame, range initiation, mitigation, continuation. We can see price comes back into this higher time frame range, and then we get that initiation to the downside for that mitigation, and then seeing price move down for that continuation. An easy trade to be a part of, great attempt, and then we move on to our next day. Monday, we was able to get into a winning trade. Tuesday, we was able to take a break even. So we're already up for the week. We're not trying to hold ourselves or not doing anything. Actually, I'm still continuing to be a participant in what I understand. It's very important to do what you understand. Don't shy away. Don't become hesitant based on your information, especially when you're trading our framework, range initiation, mitigation, continuation. This is all you need to enable you to catch trades in the right direction. It's what I'm using all the time, and it's definitely what I recommend you guys to use as well. What can we see here? Price moving into London session. We can see how price moved low from this range that was created. Price then at the open of the session moves into that mitigation point, and then we see it initiate in that bearish direction. Now, this would have been a lovely trade to be in. There are reasons why I wasn't a part of this trade. I didn't really see lower prices come into the market at this location. What I wanted to see was actually the opposite. Why was that? Well, if we look at the framework we was presented the previous day, let me apply our A to B framework. Where we located, actually located in discounted prices. So here I was not really interested in getting in too low in price. I felt that price wanted to come and take this liquidity that was resting just above. And actually what I was looking for was price to move lower so I can then look for that buy. Some more confluences here. What do we see? We do see that higher time frame sideways range. And this is exactly what I was trying to play for higher prices. So let's zoom back into that 1 minute chart and let's look at the entry process. Range being created and then initiation out of that range and price pulling back in. As we know, stop below the low. We're looking for that protected stop loss. Safe stop losses are so important. We need to understand that as much as we're executing our trade at the point of mitigation, our stop loss placement is just as important. And we know based on that RIMC process that our stop is going to go below the low. This follows my 1 minute strategy. Seeing that point of mitigation, happy to execute, looking for higher prices, and we do see them price extends in that direction. I do trade a high RR method. I'm always looking to extend my TP into higher prices. We see if I zoom out here, price didn't extend any higher than this high over here, and actually this trade ends up being a break even. And we're seeing I'm getting that break even the next day. I'm looking to see price move higher. We are extending, and this is great price delivery to see. I am playing the mitigation out of this direction, expecting that previous high is going to go. So I am holding on that trade into extended targets. When we think about take profit, we don't always need to aim for higher R. I do, following my processes. This is what I'm comfortable with trading week after week, month after month, always seeking high RR in the market. I know it will be presented to me. We know this is possible. We can think about being able to profit still with high RR, 6R, 7R. So the trader really should be focusing on what they're comfortable with. I trade what I'm comfortable with, and it's quite easy to do so. Let's move on to our last day now. We've had Monday, I took a win. Tuesday, break even. Wednesday, break even. Well, we don't know that's break even up until this point because I am still in that trade moving into Thursday's session. But on Thursdays, I tend to be a bit more active, especially if I'm in profit for the week. I'm happy to take a bit more risk. Thursday is my last trading day of the week. I do not trade Fridays. I only trade Monday to Thursday, a 4-day trading week. Let's look at this price delivery here. I am buying, even though we do see price moving from its high into lower prices. If we look at our framework, this is initiation structure right here. So actually, this is a great representation of lower prices. BFIs creating lower prices. And we can see my trade was taken in opposite direction. Why was that? First of all, at that time in price, if this is relatively high, this must be relatively low. And I'm not going to sell in low prices. What I would look to do is trade when price is pulling back into those points of mitigations, then I can trade in that bearish continuation. I typically trade between 1 to 2 trades per session. And this was one of the sessions which was unfortunate that is my process. But again, we have to be consistent with our approach. Hopefully you can see over these days, I've had a consistent approach. Let's get into the entry. We had that range, price initiated out of that range. We came back into it, and then I looked to be a part of this execution for higher prices. We can see here, stop loss being 2.2. This is the lowest stop loss that I'm willing to take on the 1 minute chart, looking for that extension into higher prices. Let's quickly zoom out of the chart and see the location of this trade once again. And if we look left, we can see that price did take that previous low in the market, and we did head back into a previous range here. This was the analysis for higher prices, and then moving back in here, we can see price taking that previous low, creating that range initiation out of the range, moving back in for that point of mitigation, and I'm looking to take that move higher. What did we see once I was in that trade? We did see price initiate to the upside, taking out the previous high. Lovely, another range initiation created here. Notice that that previous high got taken, meaning that I can move my trade to break even. Again, this follows my 1 minute strategy. This is what we do on a daily basis. We protect our capital. We don't mind being on the wrong side of the market, but the best case scenario in that environment is to get a break even off that trade. Worst case, we lose. We're low risk traders. A loss is perfectly okay. And obviously we seek that high reward. Moving back into that point of mitigation, we did see price mitigate and then start to show intention to the downside. And then as we can see, we did have that range initiation. So it's this price delivery that I'm able to read in the moment. As much as I'm not a part of this mitigation to the downside, I do understand that now is a safe time to be looking to get out at break even and then continue to observe in the market. We can see here a second trade for the session. Again, Thursdays, I'm typically a bit more active, especially if I'm up on a week. This is just my personality of trading. And what can we see once again? We can see a range being created at the bottom of this move. So again, I'm not going to look to sell in low prices, a repeatable process, following our strategy. And then we do get that range initiation out of the range and move back in. We know this is a point of mitigation. This is likely where I'm going to take my execution. What can we see? Stop below the low. And then we're looking for that continuation to the upside. Now, when price did go and take this high, I did move to break even, and price then moved back into that point of mitigation once again, and then moved higher. So that was a break even trade for me. I actually got a break even here from the previous day. I got a break even here off this long, and I got a break even here on this long as well. So it wasn't the best way to end the week, but I am up, I am profitable, and I am happy with my performance. If you notice from these trades, they're all consistent. They're all following a simple 1 minute strategy that we can utilize to be in good positions, following our range initiation mitigation framework, and then position ourselves using that same fractal delivery on a lower time frame. If I zoom out, you can see exactly why I was taking that trade. What can we see? We can see range initiation, price pulling back into that point of mitigation. And this is a beauty. These are the bread and butter trades, the high probability trades that was presented to me in my session. That's why I was happy to take another opportunity to get long. And we can see that trade doesn't actually play out to full TP, showing us that price is still in that bearish initiation, but we are able to position ourselves well and consistently. So guys, that's a full week worth of trading. This is how I trade my 1 minute strategy. These are the opportunities that I present myself. If you notice, 4 days trading and every day at the same time, approaching my session in the same way, using the same framework, a simple range initiation mitigation methodology to make good decisions in my session. If you also notice, when it comes to execution, I have a repeatable mechanical approach. I'm not going to do anything different than what I've done here. If I go on and show you more recent weeks here that we're not going to go over in too much detail, but we can clearly see here that I'm following the same process in price. Mitigation, continuation to the downside. Now, I'm not always going to be a winner. I'm not always going to be a loser, and I'm not always going to break even. But by keeping a repeatable approach and using that approach over time is really allowing me to succeed in the markets. Now, if you like this video, give me a comment, drop a like, and I'll catch you in the next one.